Good day, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Thursday, the 13th of August, 2020. Well, looking at the markets, you got a real mixed picture. You can see Christmas colors behind me, the red and the green, and they're all over the board because that's the kind of market we had today. Markets were fighting themselves one way or the other. We had attempted rallies in the FXE, the euro and the pound, but down in the yen. Gold up, GDX up, but then you had the silver market up with it too. Where the markets got hit again was TLT, is real interest rates are climbing, and they're climbing quite a bit. We were just down in the 10-year notes, if you'll recall, at 0.52, 527. We're back up near 6.9. So you've got this market that has come back. There's a lot of funding going on, a lot of people that are bidding on the government instruments. They want more yield, and that seems to be the play right now. So we'll see what this means. When we take a look at the chart of XLK, we still have a gap in the chart. Gaps often get filled, and that gap's around 110.47. We'll see if it does it. As I pointed out, I gave you a science fiction deal. Let's assume the market in here one day gaps up and clears this gap point, which is right here, the high here. Doesn't fill the lower gap, gaps above that 115.57 and stays above that gap. This would then be called a breakaway, then a runaway, and if you had a third gap, it'd be called an exhaustion. Just teaching you what it is. Never count on it happening. We're in a consolidation phase in the meantime, and when I look at what it's done, we've stepped out of a trend. You had been up until this point right here. Higher lows, higher highs. When you broke through this number, you left that, and all of a sudden what you got was a pattern of a lower low, higher high. Means you're consolidating. Now, from consolidation, you can start a new trend or you can just drift around. Right now it seems to be drifting. Support in the market, as I see it, is the 18-day moving average of closes of 110.53, but I don't think anybody's going to necessarily support the market there because you've left the trend. You have a higher high and a lower low. So I look at momentum eventually to see what that is. The Bollinger Bands aren't doing me much good. And the momentum in the market, well, what's it doing? Both numbers are over 80 on the close today. Both numbers yesterday were over 80, but not the day before. The day before that, I'm going to get you there, we're over 80, over 80, over 80. Here's what the market did. The market on right here lost its embedded reading on that break. The only time you can get it back is the very next day, and you got to do it by literally can't open lower typically. You got to jump up and keep going up, and it did that. It was able to hold on. It's still holding it. If you lose it again, pretty good odds that you're going back to the 18-day average. If you can hold that and move from here, the target becomes the 117.21 area. This, not price, is what's ruling, in my opinion, the market right now. In SMH, we had gotten, if you can see here, here's a market where you had your embedded reading. Now watch, you're going to lose it. The next day, you get it back, so you've got the same thing. It's like they're married together now, the XLK and the SMH, and they're both going with this. Watch this. This is going to give you your idea of what the market's capable of doing. Right now, as a trader, I'm bullish until that is lost. Same in the XLK. Lose it, then I think the 18-day averages are coming into play. You spent too much time over consecutive days over XLI. We were talking about this together. Here's this settlement, day one of being over the upper Bollinger Band. Day two, day three, day four, day five. What did I say yesterday? I said it's rare that you get five, let alone trying to go on from there. So to get a pullback under it, and that's all you have to do. That makes sense. What is the trend? Still absolutely to the upside. Higher lows, higher highs. Until you lose that embedded reading, get a little bit further from it, I'd expect the pros to be buyers in this. I don't see that having changed. In the energy sector, just like in the futures, you have the same identical pattern in the futures market. This is called a pipe. And when you get into one of these pipes, as I teach it, you want to run. And the reason is you don't know if the length of it, number one, is going to form a base or a top. Number two, you get attempts to break out down and up, and everything goes into a failure. And what I've learned with my years of putting out these updates, telling clients what to do, I want to yank my hair out, and I got a lot of hair. And it just gets really, really ugly. So you know what I learned? Why be involved? There's always a better trade somewhere else. This doesn't look to me like a good trade. The QQQ. Overbought's the first thing. Uptrend, very clear. Resistance, 277.40. Support, 265.72. Do I think the pros will support the 265.72? No. Why? Because you're overbought. Overbought means you're backing away. Let somebody else carry the day. We see the trend is up until you take out 264.63. Overbought conditions, I'm not interested in. In the emerging market ETF, I get this. I keep watching CNBC, I'm watching Bloomberg, and I'm hearing about these emerging markets, and I'm telling you, there's a huge rotation. You're seeing it in the U.S. as the rotation out of the QQQ into the other parts of the market. Well, this is also moving into the emerging markets. Traders are looking at valuations in the U.S. they think are very high compared to some of the emerging markets, and they're plying into these thinking that this length here is your base. Not making it up, I'm telling you what I'm hearing, and I'm watching chartists on TV. I can see how the market is doing that. It's overbought in my opinion. It is in an uptrend, and the way I teach charting, you never buy a Bollinger Band on that chart. The weekly chart will be where the interest is, and I'll show that on Saturday on my review for everybody. What about GLD? Okay, you went back to neutral today. What's the 18-day average? That's where the markets often like to figure out what to do. Now, what do I mean by neutral? This was a break. You created a bear market here for a daily chart. Lower highs, lower lows, bias down, momentum down. That's bearish. Where's the resistance? The 18-day average of closes. What's the risk? Monstrous. It's $10. Way too much for me to even consider. But as a chartist, I look. So what does the market do? The market yesterday rallies to 183.10 off these lows, trying to fight its battle there. You tell me what it's fighting at. That's the pattern that we're doing. So the market's trying to figure out, where am I? What do I do? In the meantime, price drop here has put you into oversold territory right away. Is this anything more than a correction? Go to my website, www.iraepstein.com. Under the word research, you'll see dated my gold report. I believe I put it out yesterday, and it's good through tomorrow. That's Friday at midnight, and then it's going to come off the website. It's all automated, should be off at that point. Take a look at what I say. I'm not going to repeat it here. I'll let my report do it. And I give you monthly charts, I gave you the weekly charts, and I gave you the daily charts. Seasonals, price counts. You got a lot of data in that. Here's the gold miners. I think back here 3 days ago, when you hit the lower Bollinger Band, the pros covered. What do I teach you here? The first time you hit a Bollinger Band, upside, downside, I don't give a darn. That's where I think pros take short-term money off the market. And they move stops, I think, very, very tight. Sometimes you want to take the whole thing off. You got to look and see when you hit it. Are you getting oversold, overbought? Where are you? If you hit it and you're embedded, well, that's just an area where you're now letting it ride and you're trying to buy more. So you've got to understand the theories, and I try to teach them all in my charting course to you. I can't do everything here, not going to everything here. These are supposed to be shorter. TLT, I thought you were going to get more short covering right here, the combination of the lower Bollinger Band, the 100-day average, because that's formidable, especially when you're oversold. Market seems to be saying, no, Ira, I'm going to run with it. I'm surprised. And I'm not bullish. I'm not bearish either. But I can see where the market has completely changed its tune. What changed? Take a look. The last time was in May that you hit a lower Bollinger Band. All of a sudden, now, here we are in August, and you hit it again. something has changed. So you recognize that maybe, just maybe, we have seen the worst in yields on the downside. I'm open to it. You know, as a chartist, you got to have your mind open to everything. But that surprises me right now. In FXE, we still have a pattern of higher lows, higher highs. It's bullish. Now you have divergence. You've got momentum pointing to the upside, but you got right here, actually, let me say this right. You've got bias to the upside. Bias is determined by the 18-day average and where the price is to it. When you're above it, the bias is up. Momentum, that's what I meant to say, by the slow stochastic is pointing down. That's called divergence in the market. It keeps me away from a market. I like everything to line up. Even then, doesn't mean your trade's going to work. But what it does give you is a better shot at the trade working. So, you know, it's like a checklist. You say, I want this, I want that, and you go through it. Again, folks, I want to tell you something else. I'm going to hold my first webinar this Sunday at 5 p.m. Central Time. The invites went out first to all of my paid subscribers. Tomorrow at noon, if you're in our database, you will get an invite. And it's first come, first served to get into it. Seating is very limited. And then at 5 on Sunday, you get to ask all your questions. I'll do my very best to answer them all. It's going to be a lot of fun. Probably last in the neighborhood of 45 minutes to an hour. Markets will be open in terms of the future, so that should be cool. So you're not going to be able to see it on our website. You've got to get an invite from me. So if you haven't gone on our website and signed up for a free offer, it's time to do it. In addition, if you haven't read my gold report, that's going to go off our website. I only keep my special reports up 3 days. Either look at them or don't look at them. That's your choice. But I really covered an in-depth gold report and give you what I think longer term. I'm Ira. You have a great day. I'll see you tomorrow.